I'm a huge fan of very reliable indicators potentially showing us where we might bottom, and the Pi cycle indicator has given us exactly that with a really cool path back up to our all-time high at $69,000. And I want to go through all of this with you, but before we get into that, we have continued to slip a little bit lower here. Take a look at this. We've, on the weekly time frame, continued to trade a little bit lower. We've been capturing a little bit of resistance in this range exactly as we've expected, and one of the biggest results of that is if we take a look at the Fibonacci retracement that I've been monitoring quite closely for this entire rally. What you can actually see now from our low to the high that we've set is that Bitcoin is going to start having some resistance lining up with this 236 level right here. And where would that come from? It would be from the Ichimoku cloud. We know that we've been turning this cloud from green into red, and it now lines up with this price range around the end of this month, about a week from now, which is really important because if Bitcoin is able to pump up to this level now and basically start rallying a little bit higher, the key challenge that we're going to be faced, and something that I've outlined with you guys already on this YouTube channel in recent days, if you're subscribed, you're going to know all about this, is that Bitcoin is going to be under a lot of pressure from resistance levels now. You see, we've been losing areas of support, we've been responding with a lot of weakness, and the market knows that, right? People aren't that stupid. And if we look at the 𝗬𝗢𝗥𝗙𝗚 dashboard real quick right here, we're starting to see some small changes. Fear and greed index is at 53. Long and short ratios still super skewed towards the long side. We still have 1.8 long positions for Binance retail traders for every short, which is it's a ridiculously aggressive ratio right now, guys. Retail traders are so fucking bullish. They're foaming at the mouth right now in this market, which I think is a huge indication that we could be ready to continue to drop lower, which means if we do start rallying up to these resistance levels, I do have to start screaming resistance and talking about how the market does generally find drops around these levels, right? If we kind of pause a little bit now and then start moving up, it would just be such a perfect kind of continuation pattern within this trend before continuing to drop down, where we have one big leg here, a bit of a pause, and then we continue to drop even lower. And so that is something that I'm going to be keeping an eye on, and we do still have that 26.7k area of support in play, this Fibonacci level that we know has been significant for the short-term market. We don't really have a lot of price interactions around here, but we know that 618 and 382 retracements are really important for the market, so that is still in play. Maybe we get a little bit of a bounce from here, but guys, if this fails, I don't see anything for Bitcoin until we drop down to, well, actually down to about here, to about 25k, which is still, from our current price, a fairly significant drop. And the very cool thing about this is with drops like this, they are so fertile to trade in this market. You already know the deal. If you check out Bybit using my link in the description and deposit $100, you're going to be entered into an iPhone 14 Pro Max giveaway. But if you want to get some free trading capital as well, all you've got to do is after you've made your first deposit, start trading, and Bybit will just give you free cash deposited into your account as a thank you. And that is money that you can trade with, that you can throw into the markets. You can withdraw profits that you make as well, which is really, really cool indeed. So, we've still got this in play, and that is definitely something that I'm continuing to monitor. Another chart that I want to show you right here is just going to be with the hourly Ichimoku cloud. Before I start talking to you about these really cool patterns here, this is going to be very exciting talking about Bitcoin all-time highs. We do have to cover the short-term analysis first, and if we take a look at this, we can start seeing that on the 1 hour time frame now we have been getting quite a few obvious rejections from this cloud now. It's pretty stunning. People kind of downplay the significance of this indicator, and I feel like I'm just shouting in the corner to nobody that's listening about how useful these indicators are. But I mean, it's not, you can't, it's not really open to interpretation. It's extremely clear. You can't really deny this, that as soon as the price starts to hit this cloud, we get rejected. Look at this, right? As soon as we start to hit it. So now we've gotten a few rejections on the hourly time frame, and the thing about this cloud is the way this works is, the more we hit it, generally with any resistance level, the weaker it's going to get. So we've now had one hit, we've now had two hits. If we come up for a third, fourth, fifth, what we're going to start to see is that this cloud closes up, right? This cloud previously was very wide, and if I just kind of take this line to show you what the cloud looks like now, it's not as wide anymore, meaning that we are breaking this cloud down. So I think the more that we keep on punching this, the more likely we are to rise a little bit higher. But again, it's the same image here with some of the altcoins I've been talking to you guys about on the altcoin channel. You already know the deal with this. If you want to watch that content, you can find it by checking out the top link in the description right here. This takes you to the 𝗬𝗢𝗥𝗙𝗚 daily channel. The image that we've been talking about on that channel is that as soon as we break areas of resistance, we have an area of resistance directly afterwards, right? As soon as we break that hourly resistance, which sits around over here, we have the 4 hour resistance right afterwards, which means that it's just like a lot of kind of bearish things stacked one on top of another, which I think is going to be making it a really hard push for the bulls, right? So if you think the bulls are going to have a lot of strength, then good, more power to you. But me personally, fear and greed index is a little bit too high for me to be comfortable. Long and short ratio is way too skewed to the upside. We already know Bybit traders are generally going to be a little bit better. They're slightly majority short right now. Top traders are majority long on Binance though, so we are getting a bit of a mixed image here. But what is undeniable is that retail generally get it wrong, and retail are heavily long right now, so I'm not saying that that's going to turn into a disaster for the market, but I'm certainly not saying that this is a good thing either, right? So that is something that I'm going to be keeping in mind. But what I find even more interesting is the pi cycle indicator, and this is something that we've spoken about on the YouTube channel previously, but we haven't looked at it for a while. And the thing about this indicator is it has been shockingly accurate at calling lows, right? I mean, the 2015 bottom that we had, pi cycle indicator fired off right at the bottom. 2018 low that we had, it fired off right at the bottom. And over here, interestingly, it fired off very close to the bottom, but we actually fell down by another 18%. And we know why that happened, right? We know that the pi cycle indicator fired off a little bit early and the market continued to drop because of the FTX drama, right? And the FTX thing this is one of those things that even at the time I described as a black swan event. Now, usually we don't get black swan events so quickly after we've already had one, right? I mean, we had a black swan event already back here with the COVID crash of 2020, obviously. While pandemics are statistically quite likely when you have a lot of population, all around the world, and globalization, a lot of travel and stuff like that, it's just likely to happen. It is still a black swan event. It's not really something we can price into the market necessarily. Maybe not back then. Perhaps now people are a little bit more, aware of these risks in the world. But back then we certainly weren't. So that was definitely a black swan event. And then immediately afterwards, like 2 years later, we had another black swan. So that's really fucking unusual, and that's just kind of one of the things that I think has upset the market a little bit. And I think that's why the pi cycle indicator wasn't 100% accurate here like it was on the previous two occasions, because these were the previous two bottoms that the market had, right? Other than this one right here where it didn't fire off. And again, this was a black swan in and of itself. So we're not expecting indicators to give you any defense to a black swan event, right? This is really important to understand as a trader. Is your job as a trader is to do your job 100% perfectly every single time. You exercise perfect risk management. You have the perfect idea. You check that everything is in agreement, that you're following your strategy, you're following your system, you're following your rules. And even then things can go wrong. And that's why you don't trade with too much money. That's why you have to be careful with how much money you put in, because you'll do everything right. And the only correct way to trade, in my opinion, and the way that I teach VIP members, the way we've seen so much success for myself and members inside of VIP, which you can join by following the link in the description, it's very, very simple, is that we just don't fucking break our rules, right? And one of the biggest rules is don't trade with too much money, because if you trade with too much money, you can lose a lot of money on any given trade, right? And it doesn't matter how much money you're making. If you're losing money, you can never make progress. It's like, you're trying to fill a bucket, but there's a hole in the bucket, right? You're wasting your time. So, really, really important note right there. And I think that definitely does apply to these markets. But what's interesting about this pi cycle indicator here is actually what happens afterwards. See, from the low to reaching the previous high, both times that we had this indicator fire off with 100% accuracy, what we actually had here, very, very interestingly, was a 750-day timeline to pump up to get back up to our all-time high. And I think that is a really big deal. I think what this potentially means is if we're going to do the same thing and take 750 days as we took here, 540% to the upside to get back up to the all-time high, if we're going to do the same thing, that would put us, you can't see this date on sec, that would put us right here in early July of 2024. Now, that's a really long time horizon. That's super far away from where we are right now. A little bit too far away, to be honest. But what I think is very important to keep in mind is that this is just kind of a rough estimate based off what's happened before. In all honesty, and this kind of does suck, to be honest, we are in a situation where the market is maturing, so it may end up taking a little bit longer, for something like this to play out. But at the very same time, it's still just interesting to take note of, like what kind of time frame we could be looking at, if we follow what happened in the past. And I think it makes a little bit of sense, right? Like, even if the market takes the scenic route down now, and then we, get up to 40K and we just kind of maybe go sideways for 6 months, like that kind of price action just makes a lot of sense. It's one of the key things I've been talking about, because, one thing that we know for sure is the market isn't going to give us what we want, right? Like, I mean, it might eventually give it to us, but not before it shakes people out. I'm reading the comment section of my YouTube videos recently, and I'm getting people commenting stuff like, I don't know if I should sell my Bitcoin right now. Look, if you're seeing a drop, I'm just gonna be completely honest with you. This is the kind of YouTube channel this is, right? I'm not here to, pedal to your feelings and stuff like that. Look, the honest truth of it is that if you are looking at Bitcoin coming off a low, doubling it, and then God forbid we pull back by $3,000 after we've moved up by 15K, and you start worrying, should I sell my Bitcoin? Don't worry about it, because Bitcoin will answer that question for you. What Bitcoin is going to do is scare the shit out of you, because you're basically like a sheep, not knowing what you're doing out in an open field, while the masters are out here collecting sheep, rounding them up for slaughter, and you don't know what the fuck's going on, because you're still asking, should I be selling my Bitcoin? If you don't have that awareness right now, Bitcoin will answer that for you, and it will scare you into selling. That's the only thing I can say about that. I know it's not particularly helpful, but the truth of the matter is, like, for me, I'm holding my Bitcoin no matter what, right? I think that we could go down massively potentially. I'd be holding my Bitcoin if we set new lows, but what I think is quite clear is 25K is a really strong area of support, and it's still $10,000 higher than the low that we set. If we drop down here to a really good area, it would be roughly a 20% drop from our low, 19%, take a look at this, and it would still be a whole $10,000 higher from our low, even more than this, because I didn't draw this from the right place. So I'm really not worried about it if Bitcoin gets a pullback, right? I mean, other people are going to start shitting themselves, because it's one thing to talk about 25K, but it's another one to be like relatively fresh in the market, to see the market pump up, and then you see all this red and you just think it's a disaster that's going to turn into a $3,000 Bitcoin. Look, if that's you, scared money doesn't survive in these markets. You shouldn't be here. This isn't even the YouTube channel for you, to be honest. If you want to consume content like this, which is like super realistic and grounded in these markets, you need to, you need to loosen up a little bit, get used to getting punched a little bit, because that's what this market is. This market is going to, hurt you, to be honest, until you start making money from it. It's going to be a rough journey. There's no easy way about it. Things can make it easy. You jump inside the VIP group, you get the 𝗬𝗢𝗙𝗚𝗏 Academy course, so you can learn everything I know about the markets, A to Z, analysis, trading, all these strategies and so on, psychology. Yeah, you're going to be very, very well equipped. If you don't want to do that, obviously there's a million courses out there that you can check out. They're all good. Obviously not nearly as good as this, but they're all functional. There's books you can buy for like $10. You don't have to pay me for it. You don't even have to pay anything, because all this information is out there on the internet anyway. So it's up to you how you do it. But you need to jack up your experience level, jack up your knowledge level here, because worrying about a pullback in the slightest is a bad sign, right? It's a sign that, like, when things actually do get bad, like I want you guys to keep in mind, like, the market dropping down to levels like this. I don't know what you think of me, but if you hold me in high regard as a trader and investor, I want you to know that I was shitting bricks down here. I still thought that the market would go up, and that's why I didn't panic sell or do anything stupid, but I was fucking scared. And I'm getting scared, but I'm still having that resolve to hold my Bitcoin. Everyone's like that, by the way. There's not really, like, unless you're like some sort of psychopath or just like weirdly out of tune with reality, this is gonna scare you. And it doesn't matter like how good you are at being a trader, how long you've been in the markets for. This kind of thing is scary to live through. You need to be able to weather much more than this. So if this kind of drop is scaring you, then and if you've already made some money, one of the things I'd like to say is taking profits never made a man poor. It's one of the most common things that you guys hear me talking about inside of VIP, because I have this key philosophy of, like, I'll always remove profits from a position. It's just good practice. It's good to do. There's no harm in doing it. And especially at a time like this, if this kind of thing is scaring you and you've made some money, well, what's the harm in potentially taking a little bit off the table? I'm still not worried. I still think we're super bullish. I'm still in my long position. It's made me over $200,000, and I'm sure it's going to make me more than that as I continue to keep it open. So I'll be looking to see a little bit of a further drop down before potentially moving up. I am aware of resistance levels, and if we do start to bounce, we could definitely start seeing some problems there. We are still in the daily EMA ribbon, and it could definitely still help Bitcoin. See, one of the things about this ribbon is that we can spend a little while in it. We can even get fairly low in it, and it can still be useful as support. We are right now at the bottom of it. If we lose this low right here at 27.1, we're not going to have this anymore. And that's where I think it would turn into a real problem. It's a lot less common that, we're using the ribbon, and we drop below it, but the market stays fine. That doesn't happen particularly often. A lot of the time, we might trade right to the bottom of it, or just a little bit inside of it, but then get a bounce. So as far as responses to the EMA ribbon goes now, we're in a tough position. I would have liked to see some sort of bounce already, We've spent a long time here. If we take a look at other times where we've interacted with this this ribbon successfully as support, we moved out fairly quickly, right? I mean, over here, it was a few days. Here, sure, it was maybe like 5-6 days. It took a little bit of time, but still, we moved up. You know, we weren't right at the bottom. Over here, it definitely took a while, but we formed some really nice double bottom patterns. So, you know, like in each of these cases, we had something to give the market a bit of relief. Right here, this just looks shit. This just looks like a big red candle leads into a small recovery, which bleeds slowly over the next 2 days. It almost looks like it could drop today or the very next day. I do think that the market is at the mercy of traditional finance, and I think we're still fine according to traditional finance, to be honest. S&P 500 still holding its level really well. The dollar looks fairly weak. It looks like it could drop any moment now, or at least just hold this level at best, so not particularly great. Gold still looking super solid, holding this high, super impressive. We've never been able to hold these highs before in gold's existence ever. So this is a really big deal. Gold is looking super good as well. All these things showing us that Bitcoin should be okay, but Bitcoin in a vacuum, this chart is no good. This chart is still very clearly showing us a lot of weakness. There's nothing strong on this chart, to be honest, on this short-term time frame until we come down to capture a bit of support. Again, is that bearish? No, it just means that a huge fucking uptrend where the market has doubled within, 2-3 months really. Let's take a look at this. From the low to our high, it took 140 days. Most of this price action happened within 3 months, a little bit less than that. So, basically within 3-4 months, the price has doubled and we're now pulling back by $3,000. We've gone up from low to high. We've gone up by $15,000 and we're now down by $4,000. So is it something to be concerned about? Obviously not. But people are going to be taking this out of context, and retail traders clearly think that we need to bounce right now. And if there's anything that gives me a lot of confidence that that's not going to happen, it is that retail traders all think that's the case. You guys hear me talking about this quite often. I'm going to say it again right now because it's super important. I'm not here to get in a circle and hold hands with you guys and be in agreement with you guys. When you find that you are generally agreeing with everybody that you see in the market, that means you're probably wrong, okay? Most people in these markets are generally wrong most of the time. So if you generally see that you're agreeing with them, if you're in your little fucking happy Discord trading chat and everyone's posting the same chart, fucking rubbing each other off to the same ideas, good for you. You're going to have that fun sense of camaraderie, but you're probably going to be on the wrong side of the market just because you are in the majority. You are one of those sheep. So harsh truths, whether you like them or not, the reality doesn't change. That's what's beautiful about the truth. So there you go. That's what you're getting on this channel. If you do appreciate it, you know exactly what to do. Check out the link to Bybit down in the description below, and of course that iPhone giveaway. You only have to deposit $100. You can make a brand new account to participate if you already have an account as well, and you will get up to 30k depending on what you deposit and trade with. So this is well worth checking out. OKX is also going to give you up to 30k, so check them out down in the description below. And if you want to get inside a VIP, see what's up with the course as well, it's going to be these links here. I'll see you all on the altcoin channel right now after this video. Thank you all so much for watching. Hit up the like, subscribe, tick the bell, do all that good stuff, and I'm out. Cheers.